Hello and welcome to Connect, the weekly podcast for the California MBA featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and I'm very happy that you could join us today. Before I get to today's guest, I'd like to thank our 2023 President's Council sponsors. Now, these are a handful of companies that provide an incredible amount of financial support for the California MBA so that we can continue to be that strong voice for the real estate finance industry in California before the state legislature and our regulators. So I'd like to thank our 2023 President's Council sponsors for their support. That is AmeriHome, Arch MI, Consolidated Analytics, Accelerate, Funding Shield, Guild Mortgage, Rocket Mortgage, and Western Alliance Bank. Thank you all so much for your support in 2023. And with that, it brings me to today's guest on Connect. I'm very happy to be welcoming Kevin Peranio, Chief Lending Officer at PRMG. Kevin, welcome.
Hey, thank you, Susan. Always happy to be on this podcast with you and the CMBA team.
Well, thank you. I always like to get started just kind of giving our listeners an idea of how you got into this business. It's always an interesting story. So tell us how you got started.
The origin story.
Origin story.
Yeah, it's funny because everyone mostly trips their way backwards into the industry, right? So I had a really good friend of mine named Matt Fankhauser, who was a realtor in Austin. He and I went to high school together in Dallas. We were fraternity brothers in like the cheapest, smallest, crappiest fraternity that we could barely afford at University of Texas at Austin. And he was telling me, he's like, man, I just got into this business where I think you're gonna like it. You know, I'm a wholesale account executive for First Magnus. And so he started 1 month before me, and you know, I had just left Dell Computers where I was selling computers for about 1.5 years. And you know, I met Ramaj Bali and Leslie Inman. They were running the division there and out of Austin for First Magnus as wholesale. And it's people and numbers, you know, and just relationship building and helping people get a home. And I was hooked instantly. And so, you know, it's funny because I tell everybody, you know, once you get into this business, you can never get out, right? And so, you know, it's how many times I've met someone and they've introduced me to like their son or daughter. And I say, whatever you do, whatever your dream is, drummer, actor, copywriter, fireman, astronaut, chase that dream. And if you fall short, I hope you get there. But if you fall short, only then do you come into our business, because once you get in, you can never leave.
Right. I know. It's so addicting once you're in. It's like, I know when during the financial crisis, I had this job, and, you know, my friends from politics would say, well, you know, your members are, you know, they're going to go the way of, you know, they're going to go and do something else. I'm like, no, I think I know these people. Like, this is the mortgage industry. This is what they do. And they will emerge from this and we'll be stronger. So you're right. It's like, once you get in, you're not going to get out.
A much worse analogy there is some of us are like cockroaches. It could be a nuclear holocaust and we'll still be surviving.
The mortgage industry is still here. Oh my gosh. So, you know, being a leader in hot markets is much different than being a leader in a market like we're experiencing in 2023. What can you tell us about some of the leadership values that can help a company, you know, navigate a year like this?
Well, I think, you know, looking to your leaders who've been there and done that, right? So I've only been in the business since 2001, but we had a challenging time in the summer of 2003, and a couple of big companies went out of business. I'm sure you remember ABC. They went out of business like overnight. You know, big market corrections there. And then, you know, American Homefront, I believe, came in and, well, it was the one before that. It was the one that became ABC that American Homefront bought. I forgot the name of it so long ago, gosh, 20 years ago. But, you know, then Steady Income was created and we had a good run until 2007. And then all the credit, you know, things blew up. And then 2008, you know, through 2012 were pretty tough. I mean, that was a 4-year run of really, really tough business. And so, you know, after Brexit went so bad, and you know what, last half of last year, it was brutal. But for those of us that have been there and done that, I mean, this is nothing like '08 through 2012. I mean, literally, it was like 4 years. And then we had Dodd-Frank and all this change. And so, just look to your leadership that's been there and done that. This is nothing. I mean, we're still doing, gosh, what, $1.4 trillion in purchase business alone this year. Same with last year. In a year from now, there'll be $3 trillion in purchases eligible for refinance. So I think it's just looking to leadership and give you guidance and just, keep doing repeatable actions, blocking and tackling, and putting one foot in front of the other.
That's great advice. Definitely take it from the people who've experienced it. So you're thinking back to, your entry into the mortgage space. What advice would you give to a young mortgage professional just starting out?
Well, it depends on, obviously, if you're on the ops or sales side. I mean, I will tell you that starting out is actually pretty good. That means that you were brought in for a reason. You were brought in because the company is in a good spot and needs you. And I will say that this spring purchase season has been a nice little lift compared to the last 6 months of last year. So, rates are trending down. We're very rate driven in this business. That's something we don't control, but the trend is that rates are coming down, and there's still a wave of demand of people that want to buy houses. So the macro factors are, it's not a full-blown tailwind, but it is improving compared to where it was last year. Last year was much, much tougher than here. If you're new and you're starting out, it's all about your immediate leadership. How are they providing value to you? How are they coaching you? How are they making you better? What are you learning from them? How are they forwarding and advancing your career? Our business is about moving forward and progressing. And so it's endless. The opportunity is limitless. There's no ceiling for anybody, man, woman, any color, it doesn't matter. And so just make sure your leadership makes you feel that way every day. And that's immediate leadership. And regardless of company, channel, position, you need some guidance, especially right now when, you probably are reading the news and looking at some negativity out there. You keep hearing a recession is coming. If you're so new, you don't know this yet, recessions are really good for our business. So typically the Fed will end up cutting interest rates, the Fed funds rate, which trickles its way down to mortgage interest rates. And that's a real big tailwind for us. So better times are definitely ahead. The worst is behind us, and keep plugging away.
Yeah, good advice. This is an industry with a lot of opportunity, right? Kind of again, thinking about, your start into the mortgage industry, '01, there was not a lot of technology in the mortgage space at that time. And now, of course, we're in an era where technology is the key. We're always innovating for new things. What's some of the priorities for technology adoption this year for PRMG?
Well, I'll give one kind of good example of, I guess it was around '02, '03, when Desktop Underwriter came out, right? The automated underwriting system. And it just streamlined the entire underwriting process. And I remember back then, everyone thought, oh my gosh, we're all going to be automated out of our existence and all the underwriters are going to go away. And underwriters have never been actually more expensive and scarce than they were in 2021 and 22, right? So, technology is a deflator on time. It helps you reduce friction, compress time, and scale your business. And that's a good thing. We know there's so much that goes on from a human aspect and an exception processing aspect for mortgage manufacturing, that good new technology gives us more time back to focus on that, which is never ending. Finding more people to help, talking to more people, creating deeper relationships, providing more value in that respect, and then working on the tougher deals. There's a lot of loans that get put by the wayside when it's an easy peasy refinance boom, when all the loans are, slam dunk refis that can be automated through the system. But when it's a grinded out purchase money, first time home buyer market like it is right now, and for the foreseeable future, that's really relationship based, and technology just, can't really do much there. So we've focused a lot on at this part of the cycle for the last, I would say, year. We focus mostly on lead aggregation, lead generation, business development, business cultivation. What technology is helping us communicate at scale, find bars at scale, have conversations that are deep and meaningful at scale. That's the kind of stuff that we're working on. But we're not forgetting about making the process more efficient and making it more cost effective. So we're not cutting complete things out of our budget, but there's definitely a higher focus on the sales and business development part of our tech play.
Got it. So speaking of technology, you have been at each of our Mortgage Innovators Conference since its inception in 2019. We were just talking before we started the podcast about our fun Top Gun party we had that first year. What can you share with our listeners about the value of that event?
Well, this is probably, let's dispel some myths, right? So the California Mortgage Banker Association is putting it on, so it's just California centric. It's only about California. That's not the case. If anyone even thought that, this is a mega show. This is a huge show. It's West Coast based, but you know what? So are a lot of independent mortgage bankers. So is about 25 to 28% of all mortgage production comes from just the state of California, just California business. So it's really good to be anchored here as a lender, especially during tougher times. And there's a lot of technology here. I mean, I know the Bay Area gets a lot of cachet, but LA, don't sleep on LA. You've got the .LA Tech Group, which is a huge emerging tech scene. And you've got, the tech slope up there in Cottonwood Canyon and Utah. And of course, you've got Seattle. So it's not just West Coast, not just California, but we get vendors to come in from all over that want to display what they're doing. And I love the timing of it. The timing is like the last big show of the spring before summer officially kicks off, and the first official day of summer. And then everyone goes their way, summer vacations and, does stuff with the family and whatnot. And then we don't really have any shows of any kind of meaningful value until maybe late August or even September and October. So from a technology standpoint, this is a great chance to get ahead of the second half of the year, set your roadmap and agenda, see what's working for people right now, talk to C-levels. The attendance is huge, a lot of decision makers. Like you said at the beginning of the show, movers and shakers. And it's in Anaheim. So if you want to make a family vacation out of it, hell, go to Disney, go to California Adventure, just come hang out in beautiful Southern California. People don't know that right along the coast in June and July, it's actually pretty cool. So when it starts to get hot where you are, it's a nice break out here as well. So it just has a lot to offer from so many aspects. I'm totally biased, but I'm trying to give my most unbiased pitch on why you should be here.
That's okay. You can be biased. That's all right. Well, thank you for that. We're very proud of Mortgage Innovators and looking forward to another great show this year. And so, Kevin, I was lucky enough to welcome you onto our board of directors here recently. Looking forward to working with you and finding out ways that we can continue to grow our association. Can you share with our listeners the importance of supporting the California MBA?
Well, I've always been someone who's involved. And so this is, for being now a California resident as of 7 years, Paramount Residential Mortgage Group, PRMG, is based out of Corona, California. We've been here our whole existence, and it's nice to give back. I'm always one that's involved. I mean, I can tell you, high school, junior high school, college. I mean, I've always been in all the organizations and officers and spread myself way too thin and just do a million different things. But to give back at the local level, to be a lobbying powerhouse with consistency, when you go into Sacramento and you go into the California legislature and you want to help set policy, the California MBA is known. We're a known entity. We have decades of experience there. We have obviously a fantastic lobbying consulting firm with KP Consulting, not my company, just happens to be the same name. It was a great experience for me. It's my first time to actually go to Sacramento with you and the team for my first official board meeting about a month ago for the legislative days. I mean, it's just amazing to see, how policy gets set here. And look, you read all the national trade, trade rags and organizations, whatever the newsletters go out, they're always talking about policy in California. They're talking about DC. They're talking about Massachusetts and New York. And those set the tone for the whole country. So it's really important to be part of it. And that's just the legislative aspect. Then there's the collaboration, the leadership. You mentioned, 8 great title sponsors. Every one of those companies, I know all their leadership and they're fantastic people. So there's just a lot to be had. And I finally got a peek behind the scenes to see the members of the board, amazing, incredible people that inspire me, people that I can learn from and listen to. You've done a good job of running the organization. It's very well organized. is doing great on financing, does a great job on outreach and fundraising, and continuing to innovate and get better all the time. I mean, heck, this show, in the grand scheme of things, it's a four-year run, fifth-year show. That is a young show in the grand scheme of things, but it's a banner show when it comes to mortgage technology. So, constantly getting better all the time with great leadership. I'm definitely honored to work with you and your team, Susan.
Well, we're happy to have you, Kevin. Thank you so much. And I appreciate your time being a guest on Connect.
Of course, anytime. Anything you ask me to do, I'm in.
And thank you all for joining us today as well. We appreciate you spending some time on the Connect podcast. To access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcast, and Spotify. That's it for this week, and we'll see you next time on Connect.